Ever feel like you're kind of always playing catch up with the market?
Yeah, I know that feeling.
Today we're diving into something different. It's called the European Opening Range Breakout.
Okay, sounds interesting.
So the idea is to, use those early morning market movements to get a read on where things might be headed for the whole day.
Hmm. So using Europe to kind of predict the U.S.
Exactly. And the best part is our source for this deep dive is a super quick, 3-minute read. You know we respect your time.
Perfect. Love those. So this European opening range breakout. Tell me more.
Well, instead of getting lost in the midday chaos, when everyone's trading like crazy.
Right.
This is about spotting the early birds, the ones setting the tone.
So like the early action in Europe is a clue for the global market.
You got it. Think about it. Those first few hours of European trading, they're like a sneak peek into global sentiment. Traders are digesting news from Asia overnight and kind of setting the stage for when the U.S. markets finally wake up.
Makes sense. So how do we, actually use this strategy? I remember this source mentioned a 30-minute window.
Absolutely. It all revolves around something called the European range.
European range, all right.
Basically, it's the highest and lowest prices during that 30 minutes right before London jumps in.
Okay, I'm with you.
Think of it like, I don't know, setting the boundaries on a map right before the adventure starts.
I like that.
So picture this. You're sipping your coffee, watching those lines on your chart, and then bam, a breakout.
Breakout, there it is. What signals a breakout? What should I be watching for?
You want to see a strong move, right? Like a decisive push past those boundaries we talked about.
Okay, so it's got to be more than just a tiny wiggle.
Exactly. Typically, you're looking for a surge of at least 10 pips.
10 pips, a pip being.
Ah, right. For those just joining the lingo, a pip is basically the smallest price move an exchange rate can make, like a penny in stock market terms.
Got it, thanks for that.
No problem. Or another way to look at it is the breakout should be at least 1/10 of the average true range.
ATR, right, that rings a bell. Something to do with how much a stock tends to fluctuate.
Bingo, you got it. Let's say a stock has an ATR of $1, a 10 pip or 1/10 ATR breakout might not be that big of a deal.
Right, because it's kind of normal for that stock to move that much anyway.
Exactly. But if that same 10 pip breakout happens on a stock with a tiny ATR like 0.50 cents,
then it's like, whoa, something's up.
you got it. It's all about context. The ATR helps you gauge the strength of that move. Now, our source also mentioned using shorter time frames, like 2 to 5 minute charts. What do you think about that?
Shorter time frame. Well, I guess it lets you get really precise, right?
Exactly. It's like zooming in on the action. You can catch those breakouts early on, maybe even enter the market with more, precision.
That makes sense. And I bet combining those short time frames with tools like moving averages or oscillators could be really powerful.
You and I are on the same wavelength. Though, gotta ask, all this sounds almost too good to be true. Are there any curveballs we should be ready for?
Oh, always. Trading wouldn't be exciting without a few surprises, right?
Very true.
But seriously, unexpected events can really shake things up. Remember that economic calendar the source mentioned? Yeah. Big announcements like interest rate changes or major economic data releases can derail even the most solid strategy.
So staying informed is key. But beyond those big economic events, are there any other red flags to watch out for? How can we tell if a breakout is legit or just a head fake?
You always have to read the market's mood. And that's where understanding volatility and that ATR we talked about becomes even more important, especially as the week goes on.
Okay, so later in the week, things get a little more unpredictable.
Exactly. Generally, higher ATR values mean more volatility, and that makes reversals more likely.
So bigger APR, bigger chance of a sudden shift.
You got it. If you're seeing those high ATR numbers, especially later in the week, it might be time to tighten up your risk management. Be ready to adapt.
So it's like being a poker player, right? Gotta know when to hold 'em and when to fold 'em. This strategy is simple on the surface, but it needs you to pay attention.
Yeah, for sure. It makes you think, what kind of trader does this strategy really suit? The risk takers, the ones who can think on their feet, or maybe those who are more, methodical and analytical?
That is such a fascinating question. I bet it's a bit of both. You got to have the discipline to stick to the plan, but the flexibility to adjust when the market throws you a curveball.
Totally.
Well, we've covered a ton of ground today. We talked early morning breakouts, the importance of staying informed, and of course, managing those risks. But remember, this is just the tip of the iceberg.
a taste.
Exactly. There's a whole world of trading strategies out there waiting to be explored, so keep learning, keep experimenting, and who knows what kind of trader you'll become.